My name is Nicholas Ng and I'm Senior Director in JLL's Capital Markets team in Singapore. I'm here to provide you with a market snapshot of the Singapore residential market for the second half of 2023. Singapore's private residential market remains active in the first half of the year despite the multiple rounds of property cooling measures implemented, a weaker economic outlook and persistently high interest rates. Prospective buyers are still keen on purchasing residential properties, not only for their occupation but also as an avenue for wealth preservation, which in turn keep prices resilient. Compared to last year, more units were launched in the first half of 2023. Developers exercised caution in project launches in the first half of last year due to the December 2021 property cooling measures. In the second quarter of 2023, overall sales volume rose quarter on quarter. This increase was driven by a sharp rise in new sales, on the back of more fresh project launches during the quarter. Buying interest in new and popular projects remains strong, despite limited selections. For example, Tembusu Grand sold 89% in April, and the reserve residences sold 80% in May. The level of unsold stock remains low. Developers, though cautious in view of higher development costs and a lower sellable floor area due to the standardization floor area computation, continue to search for reasonably priced and well-sized sites to expand their land banks. The government is taking measures to address the market imbalance, where demand for private housing outpaces supply. Under the second half 2023 government land sales program, the supply of residential units on the confirmed list has been raised for the sixth straight period, contributing to an estimated 5,160 units in supply. This enables developers to have a wider range of choices when sourcing for sites. Some of the sites are also conveniently located near train stations along the Thomson East Coast Line, enhancing accessibility for future residents. In the second half of the year, buying demand is expected to remain healthy, supported by demand from local purchasers who may seize the opportunity to enter the market. The latest cooling measures in April 2023, which has raised additional buyer stamp duty rates, are harder hitting towards foreigners, entities, and those buying under trust. Demand from these groups of buyers could be moderated as they now face significant hikes in stamp duties. Developers sourcing for sites are presented with more options, as half of the sites in the confirmed list under the second half of 2023 government land sales program are within the central region. As a result, there is potential for the private land sales market to improve, as sellers from collective sale projects may be more open to negotiations amid greater competition. This could ease the stalemate in the private land sales market, where the gap in price expectations between developers and sellers have impeded the number of collective sales deals for the past year. As we look ahead, Singapore private residential market remains dynamic and resilient despite various challenges. The government's effort to balance demand and supply along with the continued interest from local buyers indicate a relatively healthy outlook for the market in the second half of the year. Thank you for watching this quarter's Residential Real Talk. We will see you next quarter.